Well, thank you, Sheena. Happy Aloha Friday, everybody. Hopefully everybody had a great week and a nice end to the first quarter of 2023. Boom.
Oh yeah, done. Wow.
Power already. Old news.
We're gonna move on.
So, we can start with these needs and good deeds, and after that, I was kind of hoping to just get feedback how everyone's kind of Q1 was, from what they thought, what their goals were for the beginning of the year. Has anyone actually hit them? Are they falling short? And yeah, maybe we'll focus on something like that today. And but does anybody have anything on the line? Anything they need? Deals, money, refis?
Tyler could share a deal in Houston, a 57 unit, if anybody's interested.
Yeah.
But we could go
That's
last.
cool.
Anybody else got leads, needs, deeds, weeds, seeds too? Yeah, get seeds too.
Crack seed.
Crack seed. Hey Tyler, can you get ready with the deal analyzer for the Houston one? Would you
I
mind?
can, yeah.
Perfect. We'll see if anybody else got anything first.
Yeah, if anybody has a deal on the line too that they're looking to offload or get funded, then
Or
now's
anybody
the
got any problems that need to be maybe strategized with some other peers and brainstormed?
yeah, no shame. We can always sidebar too, because Jojo, you have something? Maybe not. Okay.
Money. Private money.
Private money. Money.
Jojo and I need money. I love
It's
it.
like too many deals.
Too many deals. Let's go. That's a great problem to have, by the way, as long as they're deals.
Tay, is it you need money for the that deal that you're working on right now in Indy?
In India or in Kansas City, the 74 unit?
Oh yeah, sorry, Kansas City.
So Kansas City 74 unit. Well, when we get to the numbers, then yeah, we for sure are gonna need to do some capital, but we're still Jojo and I are still raising for the 13 unit that we closed on in January.
Oh, gotcha.
Yeah, that's what it is. I think we need about, I believe, like 130 something and change to finish raising the down payment, and then probably around 75K for renovations. And yeah.
Piece of cake. We print them this afternoon. Turn on the machine. Yep. Jacob knows how to do that. Print that cash. No, that's awesome.
Oh,
Jake, how's your stuff going?
the triplex, yeah, it's wrapping up. We're at the very end there. I just came from there today, and Kiko's buddy Glenn was cutting the grass and laying mulch. Kiko, he said, "This is my last gift." That's what he said. My final gift.
It's a
he put
peace
mulch.
offering because he like get
He is.
paid. That's why.
I know. I thought, he was there. I didn't know he was gonna be there. I pulled up. He was there. He was cutting grass with He said he didn't have money, but he bought a brand new lawnmower, $300, a battery one.
Wow.
He was cutting grass, laying mulch. And I did a walk. He did all the things I told him to do before he gets paid.
Nice. And everything works.
Yeah, everything works. Gabe said he was gonna stop by later, check out the electricity. So I'll give him the lockbox when he arrives.
That's
the code.
awesome.
Nice.
Yeah.
What
Everything
about
works.
your private loans though?
Oh, those all matured and I got paid out. The Bellingham
Okay.
one, I got paid out. I did another one. I funded a wrap and a sub 2 hybrid.
Okay.
That one was just a small amount. Was 40,000, 12% interest only monthly payments. But it's pretty cool just going through the process because we got a loan servicer involved. Westar is the loan servicing company. So I had
Okay.
to learn just like how it went together. The person I lent money to is a sub 2 student, so he hired Constant Close to facilitate the closing, and he hired a real estate attorney to draft up the documents, deed of trust, promissory note. So I'm
Nice.
in that one now.
What's the terms on that?
The terms is 12% annual interest only with a 1-year mature date. Yeah. Then always make sure I put in the late fees in case they go over the mature date. I'll increase the percentage after the mature date. Yeah, and then Pastor the Bellingham still went with Kaimana. Kaimana borrowed money from me, rolled money over, cashed me out of one, but I told him just hold on to it, and then he put it into his Airbnb project in Arizona, in Phoenix, I believe. So yeah, I'm just in 3 right now: the triplex, Cedro Woolley, Washington, and Phoenix, Arizona.
Awesome.
Yeah,
Yeah, I love hearing your progress, Jake.
that's good. Yeah, and it's all I get all monthly payments now too, so it's like I'm cash flowing, but
Yeah.
my
Heck
money is
yeah.
tied up. But at least it's in. I'd rather have it in that than stock market. So yeah,
Yep.
I did. Yeah,
Nice, man. Well,
that's I just trying to do that and learn at the same time too, right? Alongside Kiko. So I feel like for me, that was a way where I could learn. I could still make a return on my money while learning more on the
Yep.
conservative side. And then now that I'm starting to get more educated, more knowledge, more confident, now I'll start probably looking at deals for myself to pick up maybe a burr here or fix and flip, stuff like that. So
hell yeah. That's awesome, Jake. Congrats.
Jake's doing awesome. We're gonna eventually be his private lenders. It'll be fun.
that
Yeah.
would be cool.
that'd
Yeah.
be great.
I know you guys got the cash, and yeah, I just learning, and I don't mind putting in the work, paying my dues, and yeah.
Let's
Just gotta
go.
show.
Nice.
Jacob's an amazing project manager. So
And that's not an easy gig to master.
Yeah.
Some people are natural at it, that they can make people move, without having to scream or shout, or, it's kind of an art, and I've always learned and one is because for me, I would hurt myself or die out in the field if I had to go every day, and I would be fired, so I know how hard it is. And in my eyes, I'm like, man, I owe these guys my lives, they're out there pounding out, sweating it out. So when I go on site, it's always to point out the good, and you take note of the bad, and then you go back and and then we talk about it later. But when I'm on site, I'm like, wow, this is great job, guys. It's not my house, even though we might own it. When I walk on there, that's their job site. You gotta show respect.
Yeah.
And but being a great project manager is that's not easy. I'm not good at it, to be honest. Yeah. All right, guys. Well, if nobody has anything else, then Tyler, maybe we'll hand it to you real quick.
Alrighty. Okay, let me share my
Hey, Tyler,
screen.
before you go, just a couple quick things in the chat there. So we posted the Rise Up. Corey and I are going to be co-hosting with a group in Vegas, April 22nd. So come out, it'll be fun. We're gonna have a good time. There's gonna be some actually really interesting content. And it's not so much a mastermind as it really is just working together, learning together. So $50 includes food and open cocktail, all the content, pretty cool hangout. So let us know if you're interested. You can actually go to that website or that link and then register there. Sweet. And I think that's it.
Thank you, Jay. Yeah, so and our event, I don't know if so far we've done 2, one in Honolulu, one in Tampa, and maybe I'm biased, I don't know, but it's definitely different. It's a different event. It's not your normal mastermind. It's not just like the basics. There's I think a lot of content and value on a lot of the intangible lessons that we all need to know to navigate this business and this industry, right? So I think it's definitely a different feel, and one that I like is a little bit more intimate, a little bit higher level. So anyways, yeah, if you guys can join us, it'll be April 22nd in Las Vegas. Tyler.
Alrighty, can you guys see my screen? Yeah. Okay, cool. So this is the La Terraza Apartments. It's a 57 unit apartment complex in Southwest Houston. So what I did was in our team drive, I created an individual drive for the La Terraza Apartments. I created an executive summary, made the investment model, uploaded the financials, I created a rent comparison Excel, and then I added additional information and some photos. So today we're going to just go over the investment model because the executive summary is about like 10 pages of the neighborhood and then the vacancy for the area, the whole economic structure there. So right now we're going to dive into this. So the purchase price is 4.18 million for 57 units, comes out to about $73,000-ish per unit, which is pretty great for that area. We were actually looking at one under contract with one in the 90s. So this one is actually probably in a little better location. It's slightly closer to downtown, so that might give it an edge. So that's the price there. And then we're doing 75% loan to value because loan to cost is the entire project cost, but we're actually not financing the rehab. And the rehab $700,000, which is $12,500 per unit. We haven't seen the interiors yet, but just assuming based on the property age of 1972, there hasn't been recent renovations besides a little bit here and there. So we're kind of thinking 12,500 is more than enough for what we're going to need. And hopefully if we go and tour it, it's better than we expect and we could drop that price down and save some money there. So that's how I got the unfinanced rehab of 700,000. That's the rehab budget. Down payment 1.05 million, and then closing costs is just 2% of the purchase price, or yeah, 2% of the purchase price. And then for the closing costs, this is 2% of the disposition costs, which is in the 5-year pro forma. The disposition is the sale value in year 5, which would be 118,000. So that's how we got that. Reversion cap rate 6.5%. Going in is 5.36, and a good rule of thumb is you go up 10 basis points per year, you hold it. So it would be basically just 0.5% you'd go up would be standard, but I like to go a little bit more conservative. So I did 6.5% on the disposition. And then our rent, this is actually very interesting. So when we talked to the seller, Kakoa and I had a call with him. He said he didn't raise the rents because the tenants got a little bit upset when you do that. So I thought that was pretty funny. Right now they're getting 99 cents a square foot, which is very low. Okay, so my pro forma target of $1.33 is very standard and actually probably under what the competitors are getting. So for this 675 square foot unit, I talked to Brandon Young, who works for RPM out there in Houston, and his job is just studying the markets out there and figuring out what type of rents you get. So just comparing this property with the property we're under contract with, these 1x1s at 675 can get upwards of our new ones. Well, it's actually a funny story. So the Amrita Apartments, there's 16 burn units, and we're figuring we're going to build up completely brand new units and get $1.65. Okay, so here we're only asking $1.33 after putting in $12,500 into rehab on these units. So again, very conservative. I didn't want to have to blow it out of the water and be reaching. I would rather over exceed expectations there. So $1.33 is the pro forma, which as you can see goes from a market T12 asking, which they're getting, and they're actually having a gain to lease, which is a problem, right? So they have 39,600, and then my pro forma is 53,600 for per month, which is a $14,000 difference. Economic vacancy, they have high occupancy, and obviously they don't have a loss to lease because of their rents being so low. So it's 2, and then their only other income is from laundry. And then you go down here, this is all taken straight from the T12. And then my year 1 pro forma, I just explained the rents. The economic vacancy is at 10 because when you raise the rents, there's still going to be people in there paying what they're currently paying. And you can't just kick them out in the middle of their lease. So that's where the loss to lease will be created. And then when we have to go in and renovate, there will be a vacancy. So I raised that to 10. Other income year one, I increased the rubs to 50%. So if the total bill is $100 per unit, they're going to be paying $50 of that. So that's how I get the other income year one. And then right here in the property taxes year one, I took an 80% assessed value, and then which is the 3.2 million. And then I took the Harris County tax mill rate times by that, and I got this new updated property tax. That gives you a great estimation, right? When you actually take over the property, it'd be probably a little bit different. This is a great estimate going forward in our model. Other than that, insurance, we're waiting on a quote right now. I put it at 40,000 to be safe. They're actually currently only paying 28,000 a year. And then for these other ones, I just increased it 3% based on the current inflation rate. That's pretty typical. Cocoa and I recently, for our other deal, we underwrote at around 75% loan to value, 5.7% with 5-year IO. And that's just because that's what one of our partners got on a property that's similar. So that's what we're underwriting it at. We're going to have to really dive in and actually call and apply for a Fannie loan. But right now, that's kind of what is typical for a deal like this. So that's how I got this math. Okay. And then here, starting at the rent and other income inflation, I took these numbers directly from RealPage. And I think a few weeks back on a different coffee talk, I talked about RealPage and how they take it quarter by quarter, updating the actual rates in the area, and they put it in based on a submarket, right? So if you look at this, this is the entire market of Houston, and it splits it up by submarket. So the submarket that this property is in is called Sharpstown / Fondren Southwest, which is actually one of the best in the area. So that's how I took this other income inflation, and I backed it up with the RealPage data. And then after the year one of 10% economic vacancy, I dropped it off and started tapering it off to year 5 at 4%, just because the property is achieving high vacancy or high occupancy, sorry. And then here's my assumptions for the economic inflation or the expense inflation, which you saw here as well. And that is kind of what this model is looking like in my data there. It's getting 10.7% 5-year cash on cash return with a 21% IRR average. And that can probably be a little bit higher if I were to be more aggressive with the reversion cap rate. See, if I dropped it down to 6, its IRR would jump up to 24%, but I like it at 6.5. So that is the La Terraza Apartments in Southwest Houston.
Thank you, Tyler. That was great. That was straight into the point. So you're even saying that the cost per square foot at $1.33 is conservative, right? Over it's about 1.65.
Well, the area, I think 1.33 is great, but I think for the 1 bed, 1 bath, I see them a lot higher.
Gotcha.
It's just such a big bump right now because they're asking so little, right? For right now, they're asking $650 for a 675 square foot, which is a 96 cents a square foot. So at jumping it up to 900 is already such a big bump that it's kind of scary for an investor to come in and be like, that's a huge ask, but the market backs it up. So I didn't want to push it to 950, or 925, which I think could be the sweet spot. And then the 2-bed could probably push up to 1,025, which I like as well.
Yeah, because you got to think too, if it's so low, and you have to think about gradually increasing to the market rent too, like because otherwise you get like a price shock, and
right,
and then you have tenants who you got to think about that too, right? It's kind of like a ethical thing. It's like, okay, these people are gonna get a huge bump in their rent, or they're gonna have to move out. So it's kind of a moral, ethical kind of
exactly
decision.
And this property specifically, there's 90 to 95% renewals is what the owner said.
Oh yeah.
So
totally.
I don't know if they're gonna necessarily be too stoked about that bump, even if it is market standard and that's what they're gonna pay if they went somewhere else. But
right. Okay, well, thanks for sharing, Tyler. Are we if anybody's interested, then please reach out. And Kiko, I was thinking, are we able to talk about what happened in the the Vegas apartment, because that's a big learning lesson. I don't know if we can talk about it yet because it's ongoing or.
Oh, the lawsuit. Yeah, no, we should wait. We have,
Okay. Ooh, cliffhanger.
yeah, we have some non-disclosure stuff we can't send you yet, but that's all right. Daniel wants underwriting. So hey, on that, we're gonna give you guys opportunities to stretch your mind, and that's why Tyler will bring some deals that are a little bit bigger, but not too big. The other deal that Corey and I were underwriting, that one fell through. The buyer decided to hold it because he knew he was selling it to us at $1 million less than market value. And we didn't act fast enough, so he backed out, and he's just gonna hold it. We don't have that one under contract. Corey and I may look at this one, but yeah, so we'll just kind of give you guys some opportunities from time to time in the multifamily space. We also have a 7-unit right now in Vegas that Jeremy Mateo was kind of looking at, but not sure if they're going to be able to go through with it. So if anybody's looking to get into a small multi in Vegas, then let us know too. Let's all get in the multi space. It's fun.
Let's go. All right, guys. Kiko, you had anything else on that?
No, on just if we can be of any value, like we are trying to help Tay out, if anybody else is looking at multis and wants just some underwriting help or some insights, we're trying to fine tune our craft because that's basically our specialty. That's all Tyler does all day long is run deal analyzers on multifamilies. And so we're starting to figure it out, and every market's a little different, but we'll share our knowledge for sure.
All right, guys. Well, since we have some time and I want to open it up to the room, and since it's the end of Q1, to get people's feedback, like, did we hit goals? Are we behind? Are we ahead? Anybody brave enough to unmute and share? Nobody wants to share, huh?
I'll
Is
start
that
and just
bad,
say,
huh?
yeah, well, I think this year started off, I think we all had a lot of hopes, and then I mean, obviously things changed quickly. Banks started collapsing, interest rates continue to go up. So I think it's been a lot more challenging than I thought it would be for this first quarter. And I mean, there's definitely opportunities out there, but we have to work again. It got kind of hard because it was so easy to do deals back right after COVID was over. We were almost spoiled. And now it's like, oh, we actually have to go out and chase deals and create deals, but they're out there. And so, yeah, I would say that first quarter wasn't exactly what we had hoped it would be. But I think if everybody did what we did and just kind of lay down a lot of foundation, then it's going to pick up as the year goes on, because all the contacts you made, all the things you did were all reps in a way to get you ready for what's to come towards the end of the year. So yeah, I'll be the first to admit, didn't quite hit what we were hoping to hit, but I think it'll get better. It might take 3 years, but it'll get better.
Yeah, and we can second that. I mean, and honestly, even if we did hit our goals, I think usually I feel like we can always have done more, but the start of this year was really slow. I don't know if you guys felt the same, but it was really slow. It started in November of last year, December, and then for sure January was like one of our slowest months, and I think that was kind of across the board, but we definitely didn't hit our goals. In fact, we're behind, so we're chasing. That's why we're in the office like bright and early. We're trying to stay disciplined because we're serious about this. We want to make it up. So lost first quarter, but we still got 3 more. That kind of reminds me, because Kiko, you touched on in times of slow, and when things kind of constrict, and which is happening right now. The best thing to do is kind of work inside the company and kind of work the processes, relationships, shore up inefficiencies, maybe got to trim some fat, so that's, and you're preparing yourself for when it does turn around. And man, I want to play I think I want to play a little post I shared amongst our team from John Hornick, who is now the owner of the National Private Lenders Association and the Pitbull Conference. And he was talking a little bit about the hard money space, right? And where it's going. And it, just to give a heads up to everybody, it's so exciting when it comes to institutional capital amongst our space. So private money is what we're calling it now. And after this latest meeting now I get the big picture of what the NPLA really is trying to do. Yes, it's fighting legislation that, you know, will hurt our industry, like, you know, killing wholesaling and all that. Like the NPLA was involved in that. Legislation in New Jersey that would not allow, or would allow homeowners who got foreclosed upon to buy back the property from the bank at 50% of its value. Like, who would ever want to pay their mortgage if they know that they can just buy back the house at half cost? You know, so they actually had a big victory on that one. So, but the NPLA is not just about that. They're also trying to get our space, because we're a little niche in real estate, right? When it comes to commercial loans. So whether it be fix and flip for single family or ground up construction or multifamily bridge loans, ground up or renovation, that's our space is so small when you compare it to the entire spectrum of investments out there, right? And so the NPLA is putting together best practices so that the industry, the private lenders, all operate kind of at the same level, and we all share our data. You know, we're going to be doing that as well, sharing our data, like what our loan tapes look like anonymously, because they're saying that in order to be recognized at the highest level and get the, you know, that type of money cheap, right, and a flood of capital coming into our space, we have to be a legitimate investment in their eyes. You know, and their eyes is like the big investors, the big institutions, the companies, the life insurance companies. So we not only have to kind of operate with the same code of ethics and best practices, but we also have to speak the same verbiage. So they are also trying to change and unify the vocabulary behind private money. Okay, so we don't call it hard money anymore. At least anyone within the NPLA does not call it hard money anymore, because hard money is associated with payday loans, you know, and predatory lending. And if our space is called hard money, then we will not be rated at the highest level. So the second thing is that they are pursuing rating agencies to rate our loans. Okay, so once our loans can be rated, then that's another level of capital that will flood into our space. It's even more money coming in, right? So that means higher leverages, lower rates. So what John was saying is that if you can survive these times, you know, there's a pot of gold at the end of the rainbow. So I'll find the clip, but it was a big lesson I felt, and hopefully I can find it in time and I can share it. But I thought that that's a very exciting thing for especially our company, which we're primarily an originator, right? So we originate loans primarily. And when that money comes available, they're going to be looking to place it through the top originators, you know, in the nation. So that's what we're kind of trying to position ourselves towards right now. So during these times where, yes, it's slow, you know, and it's a little harder, but for us, we're gonna try to shore up our processes, you know, get better through that, and then also position ourselves with our relationships and our value that we can offer out there, position ourselves so that when it does turn, we're at least in the conversation, right, to be one of the top originators. So even though it was not, you know, we didn't hit our goal this quarter, it doesn't mean it's over, because we got three left, you know, and it's not just about hitting your goal, it's about positioning yourself for the next wave, and hopefully it's a long expansion like the last one, right? Anybody have anything that about Q1 they want to talk about? All right.
Our team did not come close to hitting goals at all, not even remotely, but they have definitely teed up this last 30 days. And I think that they're gonna not only hit their second quarters, but make up for at least 50% of their first quarter. So it's at least, I don't know for you guys on the investor side, or on the realtor side, our last quarter always is a precursor to our next quarter, right? So they didn't have, the market had shifted so drastically in October last year, and everything just stalled here on the islands, that I prepared them that this is going to reflect on them for that next 3 months after this quarter, and it did. But we're seeing a lot of things pick up. I'm really curious on Keikoa and your opinion as well on the BRICS currency, like what's happening with the shift on Saudi Arabia and the US dollar not being backed by oil potentially. Are you guys concerned with that in your space?
I think so. I mean, I think it's definitely something to keep eyes on, but if something, it's going to take a lot, in my opinion, to have a switch. So I think it's something that we're aware of, but at least amongst those who provide us money, there's no conversation about it.
Really? That's super
Maybe that's
interesting.
good or maybe that's bad. I'm not sure, but there's no conversation about it. And here's my thoughts is like, there's one thing that we have that the American dollar has amongst any other country, and it's backed by freedom and our country's principles. So really the dollar is not backed by anything but trust, and I think even the trust in the dollar and is, even though it's whining, like it's gone down, I think it's going to take a lot more for the dollar to be overtaken by any other currency, especially, a communist one like China. That's my opinion. I think there will be World War III before the dollar loses its position.
That's fascinating. I definitely thought it would at least be a conversation for sure. No one else is hearing this conversation?
I've been following it quite a bit just because I love world politics and I love just tracking what's happening and the interrelationships that are happening between our countries. I don't have an opinion yet. Right now, I think I'm still in the observe and research mode because it's such a complicated topic, and all of these countries, I think it's Brazil, Russia, China, a couple others. I can't remember exactly who else. India, South Africa. Does that sound right?
Yeah, BRICS is an acronym for the different countries. And now
I was just trying to remember them. BRI.
What happens when all the countries join? It's going to be a long acronym. That's the thing, is those are major countries. Those are massive economic powers. So if they were to come and challenge the dollar, and if they were successful, let's just say however they get there, then that's going to make a huge difference, because right now the US dollar is the world currency. And so it's going to change things for sure. And I don't actually know exactly at what point does it become official, that they're successful. Like, do they just decide, or does some large, like what governing body decides that this is going to be okay? Ashley, you got to unmute. It's okay. I'm sure
it's my mic.
I'm sure it was awesome.
It's Brazil, Russia, India, China, and South Africa. And like they've come together. Okay, those countries, it's great if they hooey up and they have this crypto gold backed currency that they're, arguing is better than our fiat currency. That's fine, no problem. However, I think that the conversation is that Saudi Arabia, these oil-based countries, they're thinking about removing, right now they trade their oil in US dollar. And as of this week, they're in conversation about exchanging it and trading it in yen. And I think that's when it becomes official, right? Is when major global resources are being traded no longer in the US dollar. And that, if it does occur, is going to set the precedence where people start losing that faith. And I don't think that that's going to be the economic collapse per se of America, because there's plenty of very sustainable countries that are not obviously their currency isn't the leading currency. And we have, still a lot of benefits. But I do think it's going to be really interesting to see how it impacts investing, foreign investors, where people are parking the money. It does influence, where people are placing their money and investing it. So I'm just surprised it's not a conversation. But if you hear about it, you should give us the dirty deets.
Yeah, I mean, I think your point is good that we should all be very aware of what's happening, because this is historical times. The stuff that history books will be written about in the future, and our grandkids will be talking about, oh, that season when, and we lived it, right? I think my concern, and as we're all listening in, is my concern is actually focused on what does China do, because China is so connected with their commerce to so many of the different countries. So if China starts to decide to put their funds outside of US dollars, then that's when I think things are going to get really interesting.
Yeah, I'm ready for it. And historically speaking, I mean, we're kind of coming to that point, right? Where I think every 200 years roughly, right? They see a superpower typically change. And if history is to repeat itself, we're at a transitional point right now. So I get from this, go buy some gold and silver, because
Ashley, oh, I love it. Ashley, do you ever listen to Ray Dalio?
No, but I hear he's really pessimistic. I've just bought his book,
I
but
think he's realistic.
Oh, yeah.
perhaps I haven't listened to him, but I did
He's
just buy his
really
book.
interesting. You should watch his YouTube video, The Changing World Order.
Oh, it's
Oh,
great.
I did watch that. Yeah, that I did watch.
Oh, okay. Yeah.
And then
Super
I bought his
interesting
book.
stuff. I've actually been kind of looking at watching a lot of different things on YouTube just to broaden my, decide what I believe and what I don't, or alternative, rather I should say I want to be prepared for whatever happens, right? So
I think that that's what these calls are for, right? To just prepare and talk story, not to, panic or anything like that, but to collaborate and where to pivot focus and support one another.
Yeah, I think it's funny that you mentioned gold. I just started buying gold now because I'm okay, I got enough real estate that I can, I'm not rich, but I can live off of it, totally comfortable the rest of my life, probably never have to work if things just stay the way it is, right? But what happens if, we were talking about, if they stop taking US dollar as the reserve currency for oil, and then that's going to trigger other countries to stop using it as much, and then they're all going to start sending their dollars back to us. That could cause inflation, lead us to hyperinflation, the dollar, all those kind of different scenarios where and let's say well, real estate has value, and you've got tenants, you've got rental income and all this stuff, and it's well, yeah, probably hopefully none of this stuff will happen and it's all conspiracy crazy, whatever, right? But
Right.
if it did, there's if it got really bad, you got the potential of the dollar's worthless and the tenants aren't going to be able to pay rent. I'm not going to, the property is going to become more of a liability probably than an asset. I mean, I don't know. There's all these possibilities of what could happen. So everybody's probably thinking right now, holy cow.
No, I don't think it's a panic moment. I just think that hey, you want to at least have friends with somebody who has a bunker, but nothing's probably ever gonna happen. But do I want to know somebody who's got connections and a large reserve of food? Sure.
Yeah.
By the
yeah,
way, does
to me, it's
anyone
just
here have a bunker?
a little Bitcoin, have a little gold. Yeah, right.
I didn't mean to
Anyways,
derail
there's
your
a lot
guys' topic,
really-
but Sorry.
Oh, I love it. I love it. This is the stuff that we're supposed to talk about. And that's Ray Dalio, by the way, is a Tony Robbins guy too. So Tony highly regards his opinion. So
Well, and that's why I was asking, because you're so in tied with like Tony Robbins, Keikoa, and Corey so like in with NPLA. I was figuring if there's any, groups of people that if they were concerned or it was a conversation, you guys would be the ones to hear it.
yeah, on the Tony Robbins side, we have several WhatsApps going on in the finance world side, and that topic is blowing up like crazy. The funny part is that you have the whole host of people, right? There's no experts, there's just a whole lot of opinionists, and everybody has a prediction, and it's just all over the board. So it's interesting. I think the bottom line is it's always important for ourselves to do research, listen to some trusted people, like Dalio, get involved in some of the different forums, and then form an opinion based on what you hear. But it's all over the board right now, and it's kind of fun to talk about. So maybe we can all do some research this week, and then next week we could take a little bit of time and talk a little bit about current events, because Ashley, your point is right. It's like if we're as investors not paying attention, then we're going to miss out on either opportunities, or we're going to miss out on being prepared for what the market may hold.
Right. And then like people who are focused on multifamily and such, it's not something to be scared about. People aren't going to be able to pay rent. It's like, okay, well, then there's your opportunity to buy the multifamily when the market does shift. If there is this like, great recession or sorts, and then you just align yourself with people who have employment opportunities, and you just build other opportunities around it. Like there's always solutions.
Yeah, no, 100%. I love it. Let's keep bringing it up.
It's definitely interesting times, that's for sure. I got John Hornick's it's 1 minute, so let me if you guys want to see it, I'll share. Can I share screen? Oh yeah, perfect. Well, I got 3 screens. 1, 2, that's this one. Okay. Let me know if you guys can hear the sound. Keikoa, thumbs up or down.
So within this year, we're gonna have our first rated securitization. We haven't had one in our space. Once it's rated on the second one of the big firms, S&P or Moody's, will rate one from somebody else. Once that happens, a whole bunch of capital can now come into our base, because they could only go into rated securitizations. And they're going to be searching for originators to get product, because they're going to want to participate in the asset class. And there's going to be a limited amount of people who could provide it. So there is going to be a flood of capital into our space, especially to experienced originators. So if you survive what is going on now, and you build up your execution, your technology, and everything, there is a rainbow with a pot of gold at the end of it that is going to be here before you know it.
There you go. Super exciting times. Can you imagine our space being up there, amongst all of it, in the CNBC news rolls, the private lending sector, because we hold a very important part of the finance sector, in my opinion. It's very niche right now because it's so young, like private money and institutional grade hard money. I'm talking about hard money's existed for a long time, private money since the dawn of time, but it has changed, just like mortgages, it has changed over the years. And now private money and what we do is it's a lot bigger space. It's maturing, and we're at the forefront. The MPLA is kind of pioneering it. And a lot of the leaders like John Hornick, they're pioneers of our space. They're the ones that brought Wall Street to our space in the first place. Now they're going to the next level where they're trying to unify the industry so that we take out all the bad actors, right? All the people who are being negligent are being scrubbed off the industry anyways, through the recession. They're being cleared out anyways, but they're still bad actors, so the MPLA is there to unify the industry, protect the industry, and advance the industry, which is what these guys are doing, and it just amazes me that we have the opportunity to be in that room and not just be in the room, but be at the forefront with these guys, shoulder to shoulder, like hearing the latest news of what's going on, which has been a lot in the last, like, it's too much to even go over, through these weekly calls, because things change so fast. But with all the chaos going on and all the, kind of scary news and uncertainty, like John is saying, is like, if you can make it through, and if you position yourself correctly, there's a pot of gold at the end of it. The market will turn around. And if you position yourself correctly, whether it's going into emerging markets, that are going on sale right now to scoop up a bunch of properties, and build your wealth now, when it's right timing, then that's what we should do. And the pot of gold is at the end of that rainbow. So we'll see that. We'll see it soon. But also at the conference, they were sharing, there is an economist from John Burns, which does a lot of data on single family, and the MPLA has solidified a partnership with John Burns. And so they were speaking, they had the data on screen that there's a 61% chance that we'll head into a recession by the end of the year. And he said it's that rate is growing, by the week. So, which is what we've kind of already known. We threw an event in Tampa called Rise Up, preparing for the recession, like we did that in January or February. So apparently, we've been talking about recession for so long and it hasn't come yet technically, right? But it depends on what your definition of a recession is and what are we going to do to make it through and thrive and take advantage of opportunity and make it out the other end for the next bull run. I think that's the question. So maybe if you guys are taking the weekend to reflect on Q1, definitely come back and, no shame. We can all learn from each other, our mistakes, our shortcomings, our failures, right? That's how we grow together. So it's not embarrassing, because if you didn't hit your goals, at least you're in the game, trying to hit your goals. So if anyone has something to say to someone who hasn't hit their goals, like, I don't know if we want that person around us in our sphere, so I don't think that's anyone here on the call. So yeah, let's look back on Q1 and then look forward on Q2 coming up. Anybody else got anything? Any last things, Kikwa?
Oh, that was great. I feel like I talked too much today. Anybody else got anything they want to share? It's good to see James Chun on here. Hey, aloha, James, even though we don't actually see him. We just see his name.
Aloha, James.
Joyce is on, Joyce, but that's exciting. Chemo Blaisdell. Awesome. No, good stuff. Well, I mean, I guess that wraps up the quarter, and I like what Tay says, losses and gains, but the graph goes up. Yeah, I mean, over time, it's going to keep on growing, and we'll keep growing together, keep learning together, find opportunities to do deals. I feel like this year we're starting to talk more as a group at Coffee Talk about how do we do deals together, which I think is cool. So the first couple of years, we're all just learning and doing stuff. And now it's like, Tay's talking about doing a deal in Kansas City, and we're like, hey, how do we help? How do we get involved? And some of you have actually told Corey and I, we want to invest in that Houston deal. So that's exciting. So yeah, I think this year we're going to start doing some big things together, which I think is going to set us up to catapult into even greater things in the future. So love it.
That's a great point. Like I never thought of it that way. Like when we first started this call, it was just for funsies, just to see what our friends are thinking about what's going on in the crazy times. Cause I don't know, you guys remember COVID, like everything shut down. So that was scary. It was like, what do we do now? Like everything shut down. So like those calls were kind of like, let's lean on our colleagues and friends, and our colleagues have turned into friends and almost like family. We have our own Coffee Talk family here. So I feel like our calls have also matured over the last 3 years, to where now we're ready to let's go make some moves together. Even if you don't have any resources, you have value somewhere through your relationships, through your connections that you could bring to the table, and you could bring your brain, to help us think through some stuff. Everyone can, we can provide. And I think there's a lot of smart people. I know there's a lot of smart people in this room. And although I know there's a lot of money in this room, there's a lot of our investors here, so we can make a lot of moves together. And I think we're moving in that direction just organically over these calls, seeing everybody, you know, and getting to meet people for the first time, you know, here and there. And if when you meet them, I even had to ask Tay, like the first time I met her, which was only last year, was like, is this the first time we're meeting for face to face? Because I can't even recall, you know, because I feel like, you know, we've known Tay forever now. She's a friend, she's part of the family, you know. So I think we've all like kind of matured to where like, let's go close some deals together. You know, I don't care about recession, it's slow, is the like not for us, you know. We win no matter what. Even if we didn't hit our goals, like, do you think we're not? It doesn't mean we're not winning. We're winning, you know. So I want to do some deals with everybody here. So hopefully everybody has a great weekend and can reflect on Q1 and let's look forward to Q2. Do some deals together.
Let's do it.
Great weekend, everybody. Happy Aloha Friday.